Felix here. The market is set up again for a major squeeze. You think I'm making this up? I'm not. Let me explain it to you. You need to understand what happened last week to see how Monday is the same as one of the days from last week, and therefore the day will be the same as Friday or Thursday, depending on which one we pick. But I'll explain it all to you here. Before we do that, I want to encourage you to do some digging into some stocks. European stocks are under the hammer. They're for sale, fire sale, super cheap from a stock and a currency valuation point of view. So if you go to felixfriends.org/euro 600, you get access to this enormous benchmark of literally the top 600 European stocks. I own a couple of these, not that many of them. But there are some good eggs in there, and you can filter. You can say, "Hey, I care about return on invested capital only," and you just say, "Well, filter by values. So if it's greater than whatever you want it to be, these are percentages. So 0.2, 20%. Then you get all the stocks with an ROIC of 20% or greater, and so on. So take advantage of it. I put these out here to make you a better investor, to make you better informed and smarter, and it's free. felixfriends.org/euro 600. Of course, none of the following is financial advice. You know that by now, right? You know, this crazy man with his cravats doesn't give financial advice. Only Winston does, and he's out. So lovely hike today with Winston, by the way. Let me share a few things with you that I prepared, because I think it's important you see some of the data and statistics to really understand how unusual this place is that we're in. Friday, biggest swing in history? Well, not quite, but it's the fifth largest intraday swing in history in the S&P. Seriously, the fifth largest ever in the SPX. And you might think, well, that happens all the time. No, it really, really doesn't. This is like once in 20 years type stuff. Really, really insane. So that's what we were, a 5.5% change in the market intraday. And we're going to expect very much the same on Monday, and I tell you why. Okay, first of all, you got to go back a little bit to understand the setup here. So what I was telling you before the CPI reports is that hedge funds were basically out of the market. They're very, very, very low positions in the market. They have negligible margin use, essentially leverage. Leverage is at like 2017 lows. And sentiment is just like at the bottom, like really, 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 really low. So what we then saw is lots and lots of short sales on Tuesday. And they were the largest, almost the largest in the year. We were like at the 97th percentile of that. And here you can see the net positioning. The net positioning of funds is down here. It's like incredibly low. Basically, everybody's out of the market from that point of view, from a net point of view. So they've got tons of cash, right? So when you add to this short squeeze that we had, lots of put selling into the after CPI numbers, because the numbers were terrible, right? That turned the stocks market higher because all the guys delta hedging had to buy the index en masse, massive volume. And so you get this massive hedging, delta hedging situation going on. And that was Thursday. So Thursday was like, why the heck is the market up when inflation is worse than expected? Now, on Friday, of course, the opposite happened. There's a Goldman trader who commented, "From my seat, this does indeed appear to be yet another bear market rally that should be sold." The kind of automated trading funds don't become buyers until we're above 3,900, and buybacks are not around until the 25th of October, and I want to share you a little bit more about that as well. Not much FOMO buying going on here either. Now, we made some nice money this month so far. We're up 10% on October, which is very nice. We're up 111% on the year so far with our options portfolio. I've shared every single trade here live with you in the community, and you can see that we've got a stock chart. So these are the ones from the last 2 months, and then here are the ones from the beginning of the year. So there are a couple of hundred trades here. I do most of these live on literally videos like I did on Friday. And if you want to be part of that community and learn more, well, stick around. I'll tell you what to do. If you're impatient, book a call now at felixschwanz.org/coaching. If you have a 5-figure or more portfolio, 5, 6, 7, 8, 9-figure portfolio, those are the kind of students we have. Only one 9-figure, I have to say, in transparency, but we've got quite a few 8. So check that out, felixschwanz.org/coaching. And if you are not quite there yet with that portfolio number of 5 figures, stick around till the end. I'll tell you how we can get you there much faster. Now, are Fridays just unlucky? Well, yes. So since the middle of the year, Fridays had a 0.7% downside. Now, should we always pay attention to this? Options expiry and so on, you tend to get a lot more volume on Fridays. But yeah, there is something to perhaps bear in mind here, buy on Fridays, sell on Thursdays. That seems to be the rule here. I wouldn't recommend that. But here is a nice quote from Goldman's flow desk, who basically watch what's going on. That's why it's so important to have a broker on your team, really. Flow desk summarized the post-mortem. Overall, we executed flows across US equities with an 899 BPS sell skew, with a 30-day average of minus 92. So that means that the sell on Friday was about 10 times the average over the last month. And we've been selling quite a lot over the last month, right? That's the 92nd percentile over the previous year. So only 8% of weeks, what is that? 3 or 4 weeks in the year were worse than this. If you look at single stocks products, they were net sold, which means even if you take the buyers into account, they were sold 78% sells, 22% buys. Incredible, massive net selling, largest net selling in 7 months. So we are even more bearish here on earnings. With the early earnings numbers coming out, the market is kind of hating it, right? So now, one more bit on liquidity. And I know some people will tune off and some people will say, I don't really want to understand this. Just tell me something's going to go up or down. But if you just don't fully understand what's going on behind it, and I suspect it might take a few more of these videos to really fully understand it, but I'm doing my best to explain it, then stick around. So on the liquidity side, volume basically picked up a huge amount on Thursday, right? Or after Thursday. But how many shares did we trade on Friday? 10.8 billion shares traded. What is the average? Average is 12 billion. So it might feel like volume was high, but actually it wasn't. And that's just, again, showing that how little institutions are actually trading here, that are sitting on the sidelines and watching what's going on. And as I just said, all of that volume that was traded was, 78% of that was bearish. So we're definitely still super, super, super bearish. Now, Monday, why do I write long Monday? Because I'm an eternal optimist. Now, if you look at the setup here, technical positioning, basically the same where we were Thursday morning. Exactly the same setup. Incredibly imbalanced. Even really terrible news coming in on Monday from somewhere means we are still going to get a bear rally. That's the way I look at it. So I think Monday, bear market rally. I don't think it'll last, but it'll be a rally. So if you have positions opening that are long that you want to get out of, I think if there is that pickup on Monday, obviously I haven't got a crystal ball, but that's the way I see it, then that's a good place to get out of it. So I've got one bullish trade open, for example, on Apple that I'd like to get out of, and it's got huge room for downside, but still take some profits. So that's what I do. Now, buybacks, I mentioned earlier. So there are blackout periods for buybacks, and that ends on the 25th of October. Does that mean no one's been buying back stocks? No. Buybacks that have been pre-authorized are still happening. So we're still getting about 4.5 billion every single day of buybacks moving into the market. And that's pretty huge, right? Look at November 2022 here. Massive buybacks happening this year, and there will be some more. Now, if you're buying back shares at lower prices, it makes a lot more sense than buying them at higher prices. So that kind of, is kind of a rational approach to it. So what's my summary here? Bear market rally will come, but it won't last. And it might go to, 4,000 or something like that on the S&P 500. But I still don't think that's going to last. until the Fed pivots. I think inflation is going to come down in November. This is me sticking my neck out here. You can judge me for this in November. And the labor market will eventually break. Eventually, they will break it. And it might take a bit of time because it's a laggy indicator. But the way they're hiking rates, the way that we are now expecting an interest rate increase in February, yes, in February, so as if this year wasn't bad enough, they will tank the labor market significantly. So what can you do about all of this? Well, you can make money. Seriously, come and join me, make money out of this. It's all good fun. We make a ton of money by trading volatility, reading the market, understanding where the flow is in institutions and so on. 111% up this year so far, 100% transparent. For me, that's super, super important. If you want to take some educational input from somebody, like ask them for their portfolio first. That's what I'd recommend you do. So check it out, felixfranz.org/coaching. That's for 5, 6, 7, 8, 9-figure traders or investors. And we take you in 90 days from either zero to hero, or from, if you have some basic understanding, that's also fine. But otherwise, we'll provide that to you. If you're not quite there yet with the 5 figures, also brilliant, because the most important thing is that you get started. And I want to help you get started. I want to accelerate you getting started. For that, we've got the Master Options program here. It's 100 pre-recorded lessons. You get to see my whole strategy, my whole trading script. Plus, you get to see me trade live every week. And I think, again, from a transparency point of view, that's important. But also, you get to see how I actually put this into action, how it's actually applied. And I think that'll really open your eyes quite a lot. So check it out. I spent quite a few years developing this trading script that I have. It's worked in good years incredibly well. And it's worked in what's one of the world's worst year in the stock market ever, 2022. And to me, that just says we're onto the right thing here. We've tweaked, we've played, we've messed around with this over the last, 10 years or so. And I did that because I wanted to be able to generate an extra income stream. Because at the time, I did my back in, I had a disc hernia, massive, couldn't walk, was told basically, unless you get surgery, you basically won't be able to lift anything heavier than 3 pounds. Now my cat's 4 pounds, so that was kind of this isn't going to work. Anyway, skip the surgery, obviously. I say obviously, I'm not a big fan of going under the knife, and my back's great. But it meant I couldn't run my businesses the way I was used to running them, travel every week, be on planes every week, meet people. I couldn't do it because I had to lie flat, basically, and do, Pilates. Exciting, I know. And therefore, I thought, well, let's go back to my banking days. Let's go back to my options trading days. Let's build this income stream out here so that if something like this ever happens again, and I felt pretty good about getting recovered from it at some point, though I wasn't sure, I have a plan B. And I think that's really important to have. And of course, having the plan B now helps me tremendously to build up my capital in my stock portfolio, because that's what I do with the money. But it also gives hundreds and hundreds of my students, we've got about 2,800 students now, the opportunity to maybe want to quit their job, maybe scale down their job, maybe go freelance, go consulting, maybe do something that they weren't able to do, go sail around the world, that kind of thing. Whatever it is that you actually want to be doing with your life, that's where I want to get you closer to. And financial freedom is the basis of all of that. So long rant from me. If you appreciate these videos, I'd love it if you smash the like button. It means the world to me and my boss here, the algorithm. Thank you for watching. Thanks for tuning in. I hope to see you on the next one.